Now quickly start up the Saturday session. Hello. Hello, are you there?
Yeah, I'm here.
Okay, now tell me the Asian close. 3 a.m. your time, right? Overnight session start 3 a.m. Okay. Thursday one, right? OSS. Can you tell me about the Asian Open? Sorry,
14.
Asian
14
Open
to-
is 14. Okay. Asian close. Euro Open 15.
15.
Euro Open. And then London Open 4, right? Okay. Between this, I do the pivot high and low. So this is Asian Open, so this is developing. So I cannot take this one, right? So my highest point is which one here? This one. Right? Now, this is the situation which I was telling you about, redistribution, reaccumulation during the session. I will tell you how. Okay? On Thursday, you got it. And now what do you see? What you do, you draw too many lines. You don't have to draw too many lines. You just have to take the structure at the major point. Understand? Just mark the important lines. You don't need to mark too many lines on your chart. Okay? Now, what do we have this one? Now, this is setup which you showed me, but you draw too many lines here. OH, top, right?
Yeah.
OL, bottom, right? And now what do we have here? We have the range here, OH on OL range. Now we determine the bias here. What do we have? This structure here. What is it? Can you tell me? I have to know how the price is entering into this one range. The price entering in a straight line, we have a bullish bar, and then the price entering into the OH and OL range. Am I right? So what is
Yeah.
happening before the price is entering here? What is happening here? What do we have here?
Oversold, selling
Oversold plus selling climax. Okay. And this one is what? AR. Okay. Secondary test with higher low. Am I right? And then this one becomes what? JAC. Okay, we have this whole move as JAC. Why? We mark as whole move as JAC. Okay, this JAC has two characteristics. It is breaking this AR level as well. It is also breaking this channel level. Am I right? And after that, what happens? The price goes into a range. And after once we have a JAC, what we call it as this range as?
Reaccumulation.
Reaccumulation. That's it. You don't have to draw too many lines. That's it. Just 2-3 lines. Everything is done now. Okay. Now I know this is reaccumulation process. Okay. So what will happen during reaccumulation process? What do we observe here during reaccumulation? One more thing we observed.
VCP. VCP.
Okay.
I
VCP
know.
pattern, yes. VCP pattern, yes. Of course, we have VCP pattern. You're right. So there is reaccumulation. Now we only draw the major lines. Our major lines was, first of all, this line. Okay, this major line extended from here. Okay, this is JAC. This is redistribution. This is another major structure. The third major structure would be this one. That's it. And the fourth major line would be this lower high. Am I right? Go into this level, these 4 reference level. That's it. And after that, what you're going to do? Once we have identified the major reference levels, okay, and this level is what? Bullish, bullish, bullish. So you write down here as bullish bias. Here as well, bullish bias. Am I right? Right?
Yeah, right.
And now what we can do, we can draw the irrelevant lines. Just remove it. Now we have the structure already. That's it. Finish. Okay. Now we are into this part here. Now, what is the major? Can you tell me the major bias now? The major bias is what?
Bullish.
Bullish. That's it. Okay. Between OH and OL. Between OH and OL, it's bullish. All right. Now at OL, it's also bullish. At OH, it's also bullish if it breaks above and then reacts and come back again. Got it? But at OH, it can be short term. Short term what? Short term bearish. Understand? If we have the channel here. So what happens? When you go to the 3-minute time frame, what do I see here? The price has having what? What the price is having? Some sort of channel. Right? Can you see here?
Yeah.
Okay. The major bias is bullish. Remember that. But once we are at the 3-minute time frame before the Asian close, we see this. Okay, the price is moving in a range here. It's a channel range. Now, if we can draw, this is the first. If we identify this as the first major low, this low, this first major low, this is the first higher low. Am I right? So we can draw the first higher low to here. We can draw the channel. Yes. And if we draw the channel here, we identify one more thing. What is it?
SOP.
Now at here, what do we have here? Mini buying climax plus mini overbought. Right? Short-term bias. And then if this is this one here, we can draw the line. This one would be,
Yeah.
yeah, just major. Yeah. Channel as well. We also draw the channel here. Draw the channel. AR. You don't have to write on FTI because we know that's not a major one, right? So it's just AR. Secondary test, am I right? Okay. And now you should
Wait,
know.
so for this one, the AR,
Sorry?
like after the mini buying climax, the AR is not the 2 bar after it, is it?
This one here? This is 2 bar. It is 2 bar. And yes, it is 2 bar. And if you fail to recognize this AR, the whole structure will change because now you are thinking that, okay, we are waiting for this one, shorting here, but here again at OH, I told you our bias is what? Bearish. Am I right?
Yeah.
Okay. And if this is what? This is the structure here. We got a bearish structure here. And now we have to shift our right location of AR should not be this one. It should be this one. This is what I want you to identify. And now what do we have here? If this we identify as a spring here, just by missing this point, you would have missed the whole situation here. This becomes what? Huge volume. You see, a very huge volume here in this one. This becomes what? Spring. Our major bias is what? Bullish, right? And after spring, you draw another line and you draw a dotted line. Now, where does the London open? Asian close here, right? And then we have this one here. Okay, we draw. And let's suppose if the euro opened right over here at this test of spring area, you take long because this becomes our short-term bias. Bullish, short-term bias bullish here, short-term bias bearish here. Got it?
Yeah.
Okay.
Okay.
So, but the euro open right over here, so it does not make any difference. And as I told you, once we have this one as a major structure, where is the third point? Where is third touch? Okay, this is 1, 2, 3. This is the third touch here. Okay, and now what we are seeking, the price just straight away break through it with no reaction to the downside. The first reaction came over here at the euro open. Very simple. Just take your trade right over here, stop loss right over here, right? And then why would you take this at a... Now, we cannot take this as a, we will not take this as a Fibonacci entry. Why? Because the price, if the price has closed somewhere around here, down here, then we would take the Fib entry. But here the price is optimal. Got it? So what you're going to do, you're just going to go for the 2R. Okay. So either way, you can just go for the 2R and wait for the trade. Yes, the price would come back and scare you off, but you have a fixed target now. Okay. At 2R, you must exit your trade. All right. This is the first one. The second one is that you have this bars range here, spring level and this level. So if you are in a trade here, you can exit your trade right over here. Okay. This is the first idea here. And at this point, you can consider this as a huge bar. You can just go for the Fib entry. This is also another idea. You can also go like this. You have multiple situations. If you take a Fib entry, you can exit right over here at 3R, 2R. Sorry, here. Okay.
Right.
Yeah. But if you forget, if you don't want to take the Fib entry, then you have to do a much larger AR, and then you have to develop the much larger appreciative, and then you have to bear this. If the price turns against you, you should not close it. You have to bear it. Got it? Bear this drawdown, and then the price will finally reach your level. Do you understand?
Yeah.
And now, on a short-term basis here, we have what?
Short term we have bearish.
Yeah, okay. Short-term bearish. Now, once we have developed this range, now during the London Open, what happened during London Open? Before London Open, what do we see? A range. And now if we can draw this range right over here to here. Okay, this channel, if we can draw this channel because the price is moving in waves. Now what do we notice here? Before London Open.
Oversold.
Oversold. Yes, oversold plus selling climax. Now the short-term bias changed. Now short-term bias turns in what favor? Turns in the favor of major bias. Our major bias was what?
Bullish.
Bullish. Selling climax plus oversold, right? Yes. And AR completion comes at what point? At this point. Right? This point, this whole AR, right? So London opens right over here at this point, 3 minutes. And we are already in a oversold. Yes, we can take this trade. Is this neutral bar? No, this is something like this. So we can take this trade. We're taking a stop loss right over here. We just straight away just take this 2R trade. Okay. And our second entry would be what point? Completion of AR. The completion of AR becomes right over here, right? Right? And this was a VCB pattern, so we know that the price is going to go up. And what do we notice here? After this AR, the price turned back here. Got it? Okay. Now, where would be your entry? That's the point. Where would be your entry? My first entry would be this one at London Open, right? Make my SL here and go for 2R. If I had missed this entry opportunity, the price came back and touched this level. Am I right? This one here. And this becomes what? Do we have any kind of signal over here? Are you there?
Yeah, sorry, it was on mute.
Okay. Do you have any kind of signal over here?
Kind of spring that rejected the line.
Yeah. This is whole AR phase, right? We cannot classify this as AR. Why? Because it's only one slot. This is the AR.
Sorry, I'm a bit lost.
Yeah. Sorry?
I'm a bit lost now.
Okay. I'm saying the London Open was here, so we have a what to say, selling climax plus oversold, and we have a our major bias, our minor bias or immediate bias becomes bullish, and our major bias is also bullish because of reaccumulation, right? So we can take our entry at a London Open right away, right, without thinking about anything. Just go for 2R like this. Okay, the price will somewhat range here. The price will go up, range here a little bit, and then it will go to your targets. Okay, this can happen. If you miss this entry opportunity, where is the next opportunity? That's what I'm asking. This becomes AR. Okay, this becomes what? This becomes what? The secondary test. Where would be a first secondary test here? This one, the first higher low. According to this one, becomes this one, right?
Yeah.
First higher low. And if we have first higher low with secondary test, okay. Obviously, we are waiting for this, but the price did not wait here. The price just straight away go here, right? And then broke this channel here and then tested right over here at this point. So we can classify this as what? First, second, third. When you have this one here, you can classify it as a VCP pattern. And third, after the third touch here, when you have a reaction to it, we see if there's any kind of no supply. Yes, we have. This is another entry. According to VCP.
I think during live trades, it's a bit hard to identify VCP though.
Yeah, very hard to identify the VCP pattern, because there we can it's easy to identify VCP pattern, but it's hard to identify the entry, which point will enter, right?
Yeah.
So what you can do, you can draw the line from here to here, your first touch, second touch, and this one here, just a small one here. Okay, and then what do you see? The first one, second touch, and then this is what we have as a VCP pattern. Okay, so most of the time what happens, the VCP touch, third touch will come right over here, and then you can go long. But here you broke it, and then you start reversing it, testing it. All right, so you broke this level here. So ideally, according to this rule, okay, I will enter right over here at this point. No supply. Because at this point, what happens, the price makes a fixed range. And this is a neutral bar, right? So it will have a range on both sides. And so where would I enter? I would enter right over here. So it's like a VCP pattern plus classical, but it's hard to determine without reference level. So your only major point at this level was this one, if you had missed this one. Okay. And this one here is also our re-entry, because it's testing this level, increase in volume, kind of FS no result. Yes, you could have taken this move. Do you understand what I'm trying to say?
Yeah.
Okay, that's it. Okay, but yes, VC pattern is very hard to identify, because VC pattern, what we need here for the entry here, if you take the VC pattern, we need a third touch right over here at this point. And we did here, but the point is our third touch coming over here. Did a third touch come on this line? 1, 2, 3. Yes, the third touch did come, but what happened at this point? It started forming what? A kind of built up, right? A kind of build down here, but then we broke through it. But because we are in line with the major reaccumulation, we will not go for any short trades. Understand?
Yeah, yeah. I see.
Why? Because the major bias is bullish and minor bias is also bullish. Both are aligned together. That's the problem. Okay, just keep the thing simple. Okay. And this was what London Open and New York Open and entry on 15, you already know, right? First entry.
Yeah.
And second entry over here. Okay. Now, what do I have to do if I had missed this move here, AR? After AR, what I would do, I would wait for this VC pattern here. VC pattern, if I could not find the optimal entry on the VC pattern, the next point is just go through it, JAC, test at this level. This is, or this one. This is our another trade setup. At first, no result, right? But you see, it would go too long. Okay. So remember one thing, when you have immediate bias, okay, the rule is when the immediate bias and the major bias are in the same position, okay, they're in the same position, then you can take longer trades. You should not be scared of this moves like this, retracement moves. Understand? Just fix your stop loss, take your entry, and then put your optimal right stop loss, and then take to 2R. That's it. Finish. Set and forget approach. Got it?
Right.
But this is only applicable when the major bias and the minor bias are in the same position, are on the same side. If they are on the different side, opposite side, then yes, you must take a quick trade as I told you before, according to the bias. Hold on. Hello?
Hello?
Yeah, do you understand the redistribution now? Oh, sorry, reaccumulation pattern? The same thing goes
Yeah.
for because now we go for 15-minute time frame, the last session, which is Wednesday. Wednesday 30. So where is your OSS?
3 a.m.
Okay. And then where is your London Open? Sorry, Asian close?
14.
Okay. And then your New York Open? Sorry, your Euro Open? EO. And then your London Open. And then after that, what you have to do? Identify the range here, mark the highest and lowest point. Lowest point? Right? Highest point? Right?
Yeah.
This becomes what? OH.
Wait.
Top. This becomes what?
OL.
OL. Or at the bottom. And then what do you have? Now, we have to determine how the price was moving before it. What do we have? The move before OH or before OSS. How the price entering the range from the downwards here. And this kind becomes what here? What kind of move is this here? Can I draw the structure here? Draw the structure from, because it's a major high, a first lower high would be this one. Okay. And now, if we draw this line here, SOT, am I right?
Yeah, correct.
Yeah. And then there is a significant evidence on we have this one here, higher volume, yes. Significant evidence of higher volume right over here, this spot. On the third touch here. first, second, third touch high volume, right?
Yep.
So this becomes what? Selling climax plus oversold. Okay. And of course, our AR would be this overnight high, right? This one here. Okay. So what is our major bias? Can you tell me? Bullish,
Bullish.
right? Bullish at what point? Near OL, right? This information should be kept in mind. You know already where's the reference point of OL, right? And now what happens here? That you formed a range of this. After this is jump across a creek, and after creek, what will happen? It will form a reaccumulation range. Am I right?
Yeah.
Okay. And now this is reaccumulation, right? Okay. Reaccumulation range. Do you understand why it's reaccumulation?
Yeah.
Okay, so everything's clear now. And during this reaccumulation range, where is your euro open? Euro open right over here. And what do we have? Reaccumulation, and then this is a part of spring here, very huge volume occurring right side over here before an open spring here as a hidden spring as well. Can you draw the structure for the immediate bias?
Yes.
So draw it. Why I took from here? Why I not took from here? Because this is a major one first. So lower high becomes here. This first lower high, second lower high. But of course, we cannot draw from here. This is the optimal point to draw, right?
Yeah.
So this becomes what? This whole thing? Oversold plus selling climax. Okay, and it's occurring near what point? Extend this channel here. Okay, oversold plus selling climax. It's occurring over what point here? Near what? Is it near this one, or now our major bias near the OL is bullish, right? As you determine from the structure. And now we have this short-term bias as well, bullish because of oversold and oversold. So you are already clear that our bias is bullish. This is the point where the London opens, right? So you draw the structure of this one here and this one here, right? So this one becomes, this is oversold. This becomes what? AR. Okay. And we have another move here. This first point here, the second point here. All right. First move, second move. AR would be of this one would be here, but our this oversold is only completed once we broke through it, right? Right?
Yeah.
Our oversold is complete. So this is the right AR or wrong AR location. Can you tell me? Is this the right AR location or wrong AR location? This is wrong. Why? Because the oversold has not been completed. So this overclosed selling climax. So selling climax only completed once we broke through the channel again. So this is wrong AR location. We cannot take this like this. Now this is AR. Now this move is completed. Now this is oversold. But this complete is oversold. This whole section is oversold now. Now we are finding the AR. But here, if we take the AR, we cannot find the AR, right? Our AR is found here. And this happens at Euro Open. Right? This is AR. And if this is AR, we are looking for the test here. The test would be this one, AR. Now it tested right this level, this reference level, right? This reference level. Either we have this reference level or this reference level, right? And this becomes what?
Secondary test.
Secondary test. And secondary test, do you have any characteristics? Yeah, it's testing the reference level. And what is it? What kind of signal it is?
No supply.
No supply. Got it. No supply. You should know where to put your SL and then you target the last high. Simple. Nothing more than that. 2.41 trade. Now, what you do normally, what you would enter directly over here. The problem with this is, and you target 2R and then you lose your trade, right? This is a mistake you did, right?
Yeah, correct.
But the point is, this is not an AR. And at this point, you cannot do anything, just wait because you don't have the right location.
Yeah.
Yes, if you have taken the right location after it, your right location would not be this one. But yes, if you were this would have been an immediate test of this AR could have been a trade entry for very short term. This would have been a right location. Got it? If you wanted to take, but I would not take this trade. But as a very short term trade, you can take this trade. There's nothing wrong with this. And test of this, not this bar. Test of this bar is fine. But our optimal trade entry is right over here. Got it? AR and the secondary test. And secondary test is testing this reference level. Got it? So we have this reference level and this reference level. And of course, if this becomes secondary test and this secondary test is higher low, right? So this will become the third reference level. And this is what happens here. Somewhere here, the price comes near here. If we draw the channel here, we can easily go through it, right? Now London Open. London Open at the same point. The London is opening above the AR level, right? So London is classified as JAC, right? And now we mark the high of the JAC. Okay. Now where would be a reference point? This one here? No. Huge bar here. Where would be a reference point? Now the problem with this JAC is that once we have this JAC, it immediately reversed, and what we have here? Huge volume here and then reversal here. So this suggests what? There is some sort of supply, right?
Mm-hmm.
Right. So where would you enter? You would enter right over here. If you enter right over here, it would be a loss. So what is your optimal trade entry? Now we draw the channel here, JAC. So of course we are finding what? We cannot complete this range until and unless we find what? Secondary test, right?
Yeah.
So this range is not completed. Here's the opening here, secondary test here, secondary test. So now once our secondary test was not reached here. Instead, what happens? The secondary test makes a lower high and then comes below. Now we can say that at this point, if we draw the structure like this, we have an up to that entry.
Secondary test or LPS?
Sorry? This is LPS.
Well,
this is LPS, complete LPS. But what I'm trying to say that you cannot enter right over here. Why? This is JAC. You cannot enter on JAC. Okay. And most of the people will come back and take this as reference line and try to take the trade here. Right? But on what reference? After JAC, what is formed? After JAC, the range is formed, right? And for the range, what you need to do? You need to have both support and resistance line, right? So yes, if this is JAC completion and JAC completion after what? We're looking for AR. Secondary test. Sorry, JAC. After JAC, what do we have? AR, right? Automatic reaction. Now where is secondary test? Now the range is complete. And secondary test is what? On the lower high. Okay. After JAC, we are finding the LPS point. Where would be the LPS point?
LPS point is usually near the AR,
Now,
right?
yes, JAC is LPS point, but why would this would not be an optimal LPS point? What I'm asking here, because of this. Okay. Don't take it right over here. When you have a hidden upthrust, okay, remember one thing. When during the LPS, you have the hidden upthrust or you have an upthrust, don't take that as an SBS. LPS should be a straight away point, right? For example, I tell you the LPS here. Now this one here, LPS should be straight away point, right? No sign of any kind of this one, right? This straight away LPS. Right?
Yeah.
And then you see that during the LPS, what you're seeing here, the price is forming a range, and you draw the channel here as well to identify the optimal entry point for the LPS. And now we have what? The optimal entry point of the breaks down channel, breaks above, this is the LPS completion. Got it? Our SL would be here. This is the optimal entry point. How about this one? We have JAC. After JAC, what we are doing? We are looking for the LPS. And LPS, what do we have here? We cannot take this entry point as an LPS. Okay. Now you're confused with those. Now with this range, is this what, right? Our major bias is becomes what? This one, right? So we can just, we know this whole is reaccumulation. This becomes our immediate bias, right? This was our immediate bias too, but it was, then we draw this channel. We know that this is reaccumulation. Okay. And now this becomes our immediate bias. So you need to draw, you need to delete the extra line. Why you need to keep the structure? You don't need to keep the structure because it was only for identifying the immediate bias. Now we have this structure, right?
Yeah.
So now you draw this line here. Now we have AR here. And what happens in the AR? The price break down and try to break down up here, right? We are not even getting a spring here. Okay. The price breaks down here. And now you have the idea. 1, 2, structure here. First lower holds. Ideal entry point. So our ideal entry point would be either formed at this point and at this point. Am I right?
Yeah.
But what I'm saying, why you're not taking the trade at this AR? Because of this, this AR is also becomes an upthrust. This JAC, yeah. So this LPS also becomes an upthrust. This is a problem. So you need to wait. And once you wait here, you will see that the price is forming a channel here, because the price will follow this short-term bias as well. So once we have this lower high and the price goes down, you can draw the channel to identify the optimal point. You will wait for the price to go for this level.
Okay.
Okay. Now, when this happens here, when the JAC, so JAC, remember that the JAC move should always have a channel. It's better for the JAC to move to have a channel here. For example, if the price straight away move here, okay, and then the price comes down here, and then you draw some kind of channel, identify, then go long. This is important. There should be a channel. For LPS, there should be a channel here. Or it should test this major reference line, this one and this one. If it's testing this AR line, there should be a channel. Can we see any channel around here?
No, not really.
Okay, so we only see the channel right over here, right? Okay, so we draw the channel, we find the optimal entry point, and then we go long. I will explain you about this in a video, maybe recorded. I should record a video for you to explain.